here's the key thing I'll end with. Bitcoin volatility, we all point out, it's dropped this year, but actually versus the stock market and gold, it's up. Why? Because volatility, everything's collapsed, which shows complacency. If you look at gold versus Bitcoin, let's compare the two. Bitcoin trades about 3 times the volatility of gold. So if gold drops 30%, Bitcoin's dropping 60, 70, 80%. Now, hopefully that won't happen in the near term. It has been the best performing asset in the history of mankind. The problem is it's not a baby anymore. And it grew up during an unprecedented period in history.
During the interview, Mike McGlone, a senior commodity strategist at Bloomberg Intelligence, analyzed the volatility of gold in comparison to Bitcoin. He also mentioned that it's clear that Bitcoin is about 3 times more likely to have big price swings compared to gold. The US dollar-denominated gold price is set to snap its 2-week uptrend as it attempts further recovery from 1-week lows of $1,915 reached on Wednesday. The end-of-week flows could aid the renewed upside in the gold price, especially if the US dollar correction picks up pace later in the day. As governments continue printing currency to fund expenses, the supply of the currency increases forever. This decreases the value of the currency over time, and therefore the price of the same good will increase indefinitely. Against a basket of currencies, the dollar was last 0.05% higher, holding on to some of its gains from the previous session after scaling a 6-month peak on news that the U.S. services sector unexpectedly gained steam in August. In the interview, McGlone explained that as time goes by, the value of the dollar usually goes up compared to other currencies, while gold tends to increase in value no matter which currency you use to measure it. This happens because regular currencies, like the dollar, can be printed endlessly, while there's only a limited amount of gold available. Bitcoin is like a modern digital version of this idea. Bitcoin has a bearish market structure on the 1-day chart. The higher time frame chart here was the weekly, which showed Bitcoin bulls clinging desperately onto the $25,000 support zone. Let's direct our attention towards the few clips from interview.
It's still one of my base cases. One of the best performing assets in the near term couple years is gold. The price you see on the screen in terms of dollars is 1933. I have to say 1933 because some of us remember that as the significant year ever for gold and assets. That's when basically President Franklin Delano Roosevelt devalued the dollar versus gold, and it bottomed deflation and depression. It bottomed the stock market in terms of dollars, and it ended deflation. Why? Because we just devalued versus gold. But here, that price right now is the average price for the year, and that's the highest average price ever. So I look at that as, okay, that might fit into that mantra, I love, and if it goes up, it's going to keep going up. Well, gold is appreciating. And the bottom line is how you measure it versus fiat currencies. And if you measure the dollar versus a basket of fiat currencies, the dollar basically goes up over time. Why? There's nothing better. If you measure gold in terms of any currency, it almost always goes up over time because they're fiat currencies, in particular the dollar. And that's where Bitcoin fits in. Bitcoin's just a much more digital version. So the thing that we mentioned earlier, we want to talk about a little bit is I've been writing about China a lot, and that is, I view China as so there you see that chart. That's a triple top. And the lessons I learned in the trading pits is triple tops are made to be broken.
And a huge cup and handle.
Yeah, however you want to look at it. And there's so many cool different ways to look at it, but it's just also, okay, those are technicals. Technicals can really rip you apart sometimes. It's the fundamental foundation behind it. It's very simple. That's gold measured in dollars. We all know at home happens over time. That's part of the reason for Bitcoin is there's an unlimited supply of dollars and there's a very limited supply of gold. Next question. So just the question when, how, and the key thing is the major competition for gold right now is 5.4% in T-bills. That's haven't seen that in 20 years. And the stock market's still going up. That's going to flip. Just a question of time. And that's when gold takes off. That's my view. But I like to tip that over to the macro. Now, that's gold. If we want to tip a little bit into what we talked earlier about China, I'm good with that. But that's the basics for gold. It's also the basis for Bitcoin. The problem is, and I'll end with this, is Bitcoin is just going up so far, so much, and the basis for it going up has reversed. And that is very low interest rates. So the average interest rate for the last 10 years for most of Bitcoin's existence from 2011 to 2021 was 0.5% in US. And a lot of rest of the world, it was negative. Now, if I just look at this November Fed funds future, it's going to go up to 5.44%. Those are major headwinds.
Bitcoin and various cryptocurrencies are currently experiencing low volatility, a pattern that has preceded further price declines in recent times. Bitcoin's price has remained relatively flat over the past 24 hours, staying below the $26,000 level, which has served as a key support in the previous month. In the interview, McGlone pointed out that Bitcoin displays roughly 3 times the volatility of gold. This means that if gold were to experience a 30% drop in its price, Bitcoin could potentially face a more substantial decline, ranging from 67% to 80%. China is facing several post-pandemic challenges, including a property crisis and weak consumer spending. China's exports have dropped for 4th month in a row as the world's factory struggles with weak demand at home and abroad. As per McGlone, China is experiencing wealth destruction, which is impacting different risky assets, including Bitcoin and stock markets. Let's direct our attention towards the few clips from interview.
Typically, if we do have that kind of correction, gold went from 1,000 in the beginning 2008 down to 700, 30% correction, and then it peaked at 1,900, 2011. That could happen again. I fully expect that's the risk. The difference is if you look at gold versus Bitcoin was compared to 2. Bitcoin trades about 3 times the volatility of gold. So if gold drops 30%, Bitcoin's dropping 60, 70, 80%. Now, hopefully that won't happen in the near term. The key point is you basically need some form of wealth destruction, I think. And that's happening in China. It's slow. It's been happening in some risk assets like Bitcoin, and it's been happening in the equity market. It's clearly happening in housing. And the question I keep pointing out is these are somewhat bodies in motion for one good positive reason. The number one reason should be for all risk assets is liquidity. Liquidity is still being taken away from the Fed. So now we get through this August period. We're going to September. We all know that the average price of Bitcoin in September since 2011 is down 6.5% in September. Now, of course, that includes some months that are down 26%. So if you exclude, I can check on my map and check that out. But it's that headwind that's overwhelming. That's what I have to keep emphasizing is unless we get this liquidity pump turned back on, which just give you the 2 last significant bottoms in the stock market happened about 1.5 years, almost 2 years after the Federal Reserve started easing. That was in 2009. They started easing 2007, and then 2002 they started easing 2001. Bitcoin is the leading indicator in that space, and gold is the old guard technology that has been the store of value over time. So when I measure like different commodities, some commodity people get upset with me when I point out, well, I'm glad you like this index and that index and energy and agriculture, but historically over time, they always underperform versus gold. And this is what's happening now, I think, as we get towards this inflection point, that we're going to see this leading indicator, Bitcoin. It's fitting into my narrative, one of the biggest economic resets of our lifetimes, the last few months. If it continues this path, which I expect it will, to show that relative weakness, everything follows it lower. Now, if it can sustain above 30,000 and show some divergent strength versus a stock market that's not doing so well, maybe I'll change my tone, but it's still that mode that I'm concerned about is after we've had all this ETF stuff, and I just want to kind of end with this. This ETF stuff is things that we predicted 5 years ago. It's just getting there. I love when my colleagues dig into the weeds of this, James Seifert, Eric Balchunas, but we discussed when we launched the Bloomberg Galaxy Crypto Index in 2018, the primary goal is to be tracked by ETFs. It's still not happening. We're just getting there with baby steps. And now we've found that in the last few months, it might be happening sooner rather than later. But the thing is, you have to understand point out is this thing called Bitcoin has been underperforming on a risk-adjusted basis for almost a couple of years now. To get that traditional money to go from equities to Bitcoin, to go from anything, it's got to at least show some signs of value at risk outperformance, and it's not.
The US dollar didn't do well against other major currencies last week, and gold prices went up a lot. Even though Bitcoin has been less volatile lately, it's still about 3 times more likely to have big price swings compared to gold. The ongoing trend of Bitcoin continually erasing its gains is making investors feel bearish about it. This concludes our discussion for today. We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up. Don't forget to subscribe to our channel to stay informed on the latest news and videos. Thanks for joining us.